Hello and welcome back to In Good Company. I'm your host, Maud Swanborough, Management Consultant at Woodhurst. And today we're joined with Maria Harris, who is Chair and Founder of the Open Property Data Association. We had the pleasure of Maria contributing to our latest report, The Future of Specialist Mortgage Lending. And Maria, thank you for writing the foreword as well. Much appreciated.
My pleasure.
So, just to kick things off, it would be great to hear more about your career. You've had such an interesting one. And I'd love to hear about your journey to how you started and where you are now, having founded the Open Property Data Association.
Okay, thank you. It's an absolute pleasure to be here, and thanks for the invite. So yes, career-wise, I fell into mortgages completely by accident in 2005. I can't believe I've been in the industry 20 years. Makes me feel ancient. But I actually started my career managing contact centres for British Airways and then for Npower. And decided when I was 30 that it would be a really good idea to go to uni while working full time with a 5-year-old and a 1-year-old to do a degree in business management. And it was while I was at uni, somebody approached me to say that HBOS, as was, were looking for kind of senior managers from other industries who knew nothing about banking to come into banking and bring their other experience with them. And in return, they would teach you the banking side. So I went for it, and it just happened that they kind of landed me in mortgages. And yeah, 20 years later, still here, and they won't let me leave. Um, so I was HBOS when the global financial crisis happened. We were rescued by Lloyds. So I was at Lloyds for a while, head of mortgage distribution, which what most people in the industry probably remember me from. When I left Lloyds, I went to work in building society sector for a while, which was fabulous. Did some really interesting stuff there. And then I was part of the team who created Atom Bank, which was the UK's first digital bank. So I had the absolute joy of designing and creating the UK's first ever digital mortgage, which was a very cool thing to do. And because Atom Bank was revolutionary and being the first digital bank and doing all of this digitisation, I got involved in lots of projects like Land Registry Digital Street and some work with universities and with the Home Buying Selling Council, which is a government industry collaboration to improve home buying. And it's their fault that we ended up with OPDA. So Kate Faulkner and Beth Rudolph, who chair Home Buying Selling Council, wanted to look at the concept of upfront information in a property transaction and whether or not it would improve the journey. Beth rang me to say, we've got this thing. We've got all of these data points that we think we need in the home buying journey. Can you digitize it for us? And I was like, yeah, of course we can. Got a volunteer group together, spent 2 years finding out all the reasons why it was so difficult. And on the back of that, OPDA was born.
Wow. So it kind of, you opened up a can of worms there. You were like, oh, this is a lot to deal with, a lot to handle. And then that's how kind of the association started.
Yeah.
I think I'd love to know more about, you were at Lloyd's, into Atom Bank, etc. Was there like a defining moment in your career at all that made you think, wow, I really want to be a part of this change, and I'm very passionate about mortgages or the customer journey of that home buying process?
Yeah, well, so the common thread that's run through all of the different places I've worked has always been consumer. So British Airways back in the 90s was like the number one brand in the world for customer service
Mm.
and consumer journey. And Power went through a real transition of becoming contact center into customer service center. And all of the financial services brands I've worked for have all been very customer centric. But yes, there was a moment in Atom Bank where uh, creating a digital mortgage from scratch, it involves quite a lot of imagination and having to really rethink the customer journey and design something that doesn't exist, that didn't exist before, and there's no template for that. So when we had our first lot of mortgage customers who came through, who had this amazing in-app experience, biometric security, everything in app, written in really lovely language that consumers could really engage with, where they were really in control of their journey. And the very first mortgage intermediary who got a mortgage offer from us in real time, it was 17 seconds, actually rang us to say,
Record.
think you've made a mistake. Like this mortgage offers, like I've literally just pressed the send button and the customer's sitting in front of me with their app. and the offers just popped up in the app. I was like, yeah, that's how it should work. And that moment was such so full of joy. It was such an amazing experience, and we got it down to 14 seconds, which is as fast as we can get it with the network. But 1 in 5 mortgage customers for Atom get this 14-second experience. But the rest of their home buying journey is horrendous. And even though they had this like lovely 14 seconds of joy and a really good experience with their intermediary, like we had no control over the rest of the end to end. So the customer would fill in their feedback at the end and say the mortgage process was great, the rest of the home buying process was horrendous. And I was a bit like, yeah, we need to do something about that. It's really not fair.
Yeah, and it's crazy that it can be so horrendous and very disjointed, despite the concept of buying a home being one of the most important kind of financial decisions in your life, or and it can also be equally one of the most stressful decisions. I know there are plenty of statistics on how it can be just as stressful as, having a divorce, having kids. So there's plenty of pressure on that experience, but it's interesting, the 14 seconds revolutionary. It's just the process afterwards and beforehand, which is a bit of a tangle of a mess, and it needs to be unpacked, as you said.
Moving on, I think in your forward, you define specialist lending as a defining decade. I'd love to hear more about why you think this decade now or is different to previous growth cycles and how that's changed.
Yeah, that's a great question. So there's a few different things that are happening, and isn't it weird that all these things always happen and converge at the same time? But we've seen some real regulatory and policy change in specialists. If you think about the changes that have happened to buy-to-let, for an example, that have really reshaped the industry and driven a lot of activity that it will continue going forward. We've seen a real uptick in things like bridging finance being used because the home buying process takes such a long time. So it's being used to break chains, or investors are using it really wisely to be able to do what they need to do with cash flow. So you've seen some real change in how the products are being used and the regulation and policy that's driven that. But you've also got some really significant shifts in age of population, demographics, and more people working into retirement, more people lending into later life, more support schemes for first-time buyers because we've got such a big affordability stretch. You've got real changes in how people work and earn income. So all of those things, and those things aren't going away. They are absolutely going to be here for the next 10 years. So I think that's going to drive quite a lot of kind of organic growth in specialist lending anyway. But while all of that's happening, which is all great for the sector, we've also got some primary legislation that was passed around data, which is the Data Use and Access Act. That was passed last April, so April 25. And that underpins a lot of the work that we're now doing on what the future looks like for property, for mortgages, for finance, energy, lots of other sectors. But also the industrial strategy, which was then published on the back of that legislation, actually talks about the smart data economy. And the smart data economy is all about economic growth and about driving the economic impact that we can get from having smart data economy. There was some recent work done by the Department of Business and Trade where they took 5 different smart data use cases and worked out the economic potential uplift of them, or what they could deliver for the economy. And home buying property just came out as the first by a country mile. So the potential for property, just fixing the existing process, the economic impact of that is ginormous. So if we get this delivered right, within 15 years, smart property data will add 2 billion a year to GDP, which is a huge number in its own right. We'll add about 27 billion of economic benefit to the country over a 15-year period. And the business case to deliver smart property data is for every £1 that we spend putting a smart data scheme in place for property, we'll deliver £9.81 of economic benefit. Yeah. And I think that's quite a conservative estimate because that's based on fixing what is a very broken process. I think you're then going to see a halo impact because our market is so driven by confidence, and you get the knock-on effects of people moving more often, and all of the things that then go with the home move: buying kitchens, buying, getting new things done, buying furniture, investing in property. So yeah, I think the economic impact of this is huge.
Yeah, I think, as you said, it is the knock-on effects as well. Like, that statistic is just fixing the actual home buying process. But there's so much more to it as well. The movers, the people involved in all different parts of stages, and that's why it's almost quite a kind of multi-industry transformation. It's, as I said, it's a much bigger can of worms than initially anticipated, because it requires so many different stakeholders. So as a result, something like the association that you're running is a great way to get everyone involved and understand the significance of this, because it really is a kind of like an open banking evolution, but for property data, which is very exciting. But yes, the amount of stakeholders involved is always going to be a bit of a tricky task. You touched on organic growth there earlier, and I just wanted to understand how you see, whether you think the industry is actually prepared for that organic growth. We see specialist lending as typically very niche, but now, as we kind of discussed in our report, it's very much more of a mainstream segment now. How do you think the industry is prepared for it?
Yeah, also a great question. I think our industry has proven over and over again that it's incredibly resilient. Mortgage intermediaries, mortgage lenders are very good at adapting, and adapting to pretty much everything that's been thrown at us. If you think about the number of black swan events that we've had in the last decade with, everything that's happened, and in a short period of time, and the industry's just bounced back so well and kept everybody going while it's happened. So I think there's part of that is in the resilience. So yes, partly I think some of the ability to deal with what's coming is baked in. But I think, undoubtedly the way we live our lives, the way we work with our finance, the way we earn our income, is changing so quickly now. And, we talk a lot about AI and whether or not it's going to change jobs, but it's not really that. It's more the AI and just technology, and the ability to digitally work from anywhere has opened up choices that we didn't have before. So the number of, we did our survey recently. We survey 5,000 home buyers a year. This is our second time we've done it, to ask them what their experience has been like and about their future and their attitudes to digital. And the number of people in there who are talking about they have more than one income, they have more than one job, they have fractional careers, they work from somewhere else in the world 3 months of the year or 6 months of the year, and that kind of like choice and flexibility, I think that's something that we all need to grapple with. And I'm not sure that products are really set up for that yet. I think there's a lot more we can do to be creative and to really create new products and new ways of accessing mortgage finance. But even the way we buy homes has changed. So you see much more now where you see intergenerational lending. Many more people who have maybe come out of uni or are buying with colleagues because they're sharing, because and so you buy half a property and then the other half, somebody moves in, somebody moves out. And we're not really set up for that. So I think the industry is going to go through a really nice phase of just adapting to what is a very different way of living and working with money.
Yeah, and I think you also see that later life lending as well, and the shift of the average age even of buying a home is going up and up. You touched on kind of that product-led aspect, and I agree. I think it's so interesting. We're seeing now of more of a situation-led way to approaching mortgages and lending, as opposed to suggestions. It now should be kind of circumstantial based on that customer, because the standard borrower isn't existing anymore and doesn't fit that specific criteria that we're expected to. I think also, just moving on to some of the themes in the report, we touch on how there is significant investment in those digital tools, but the lending process is still fundamentally very manual. Mm-hmm. It might be digital in the front end, but very, very manual and kind of analog in that back end. And I wanted to understand what you think are the biggest inefficiencies, and where in the stage, if there is a specific stage, where that inefficiency lies.
Yeah, so because I've been in mortgages 20 years, I've seen firsthand the huge investment and the amount of work that's been done on application systems, on connectivity between intermediaries and mortgage lenders, so that the application process is smooth and slick and largely digitised. But if you lay out the end-to-end process from the estate agent and the seller getting ready to sell their property, right the way through to the land registry being updated, and you laid out all of the documents that get shared in a non-digitised format, it's about 130 pieces of paper, and a lot of that's actually replicated and repeated throughout the process. So the really common example that most people latch onto is identity. So as somebody who is buying or selling a property, you typically have to prove your identity at least 4 times during the process, usually using a physical document. Somebody will say, can I have a copy of your passport or your driving licence, a recent utility bill, something that is in a physical format, bank statement. And you will do that repeatedly with 4 different partners through the process, who are all doing the same check in a way that can be done digitally, and where the consumer could actually do it once and share it in a really safe and secure way. But we have a very vertical approach to processing everything. So this is not blame. This is not like there's not one part of the industry. This is across, like if you did horizontally across the industry, we all do it our own way. We all have our own regulation, our own compliance, our own ways of working, our own risk appetites, our own third parties who we trust to do these checks for us or whose documents we'll accept. And what we haven't ever done is broken that horizontal end to end. How do we create and design processes that start with the consumer, put them at the heart of the process, and make it really simple for them all of the way through? And that's one of the things that Smart Data will enable. So the Data Use and Access Act is the legislative framework that allows consumers to say, actually, this is my data, I want to access it, and I want to safely and securely share it with the person who needs it to do their process. And that's a fundamental change. So yes, it's not just one thing, but that document example happens all the way through. So yeah, it's about 130 documents and about 300 customer touch points, mainly chasing to go, who's got the bat? Who's got the ball? What are we waiting for? Where is it stuck? So huge amounts of inefficiency, repetition, just very poor productivity.
Yeah, and I also think even for the consumer, you have so many different touch points, and yet you hear a lot of stories about people not even knowing where their progress is in the stage of buying a home. All their documents are with the lawyers, they're with a surveyor, they're with XYZ. It does make it very convoluted as well. But I think that act hopefully brings quite a lot of trust to people, because they are entrusting the person who they're sharing their data with and saying, I consent you to use this in the appropriate way to speed up the process, and it will benefit me. It's quite a transactional way of thinking, but yeah. I think also we talk about kind of that competitive advantage for lenders in particular is shifting quite a lot, because you've got a lot more trust placed on someone like the broker. You have a lot more kind of urge to build to scale, to make sure that these systems that are providing lenders with all this information are built to scale. Where do you think, or what do you think lenders should be doing now using all this technology? What's like their main focus to try and improve their small part of that process?
Yes, I think, and I can say this with an ex-lender hat on, when we make investments in new systems or new processes or new ways of thinking, we tend to do it internally focused first, based on what we think the consumer wants or how we need the process to work to support the customer through our bit of the journey. Some of the things that we don't think about are the foundational building blocks that enable the consumer to have the experience that you want them to have. So it's things like, how is your data collected and stored? How easily accessible is it? How interoperable is it? Can the customer reuse it? Because your data that you're sharing for your mortgage or during your property transaction is often the same data that you need for your insurance, or if you want additional borrowing, or if you want a bridging loan, or you want a second charge. So really kind of unpicking the foundations and getting the, how do you create your data so it is fair data standard in a way that consumers, and how do you make it easy for the consumer to access and share that data, and how do you wrap trust and provenance around that data? So when the customer is accessing their mortgage data or they're sharing data with you, how do you prove that that data came from an authenticated source? How do you attach digital credentials to that source? So for example, if you're sharing your land registry title, how do you prove that came from land registry? How do you know that you can rely on it? How do you know it hasn't been tampered with? And those are data foundations, kind of digital foundations that everybody's going to have to think about, not just for property, but because part of the industrial strategy and the smart data strategy is that we'll move from open banking to open finance. And open finance means that those same principles will apply for savings, mortgages, insurance, investments, all the other financial products that all of our banks, building societies and specialist lenders either use or provide. So this is a journey that we're all going to go on. So that next stage of thinking of investing in platforms needs to start with really strong data strategy.
Yeah, and I think those data standards, although they seem invisible, they're actually really quite critical. They're an absolutely critical layer to this whole kind of foundation of what the association is trying to achieve. I think also when we talk a lot about more data, people instantly think there's going to be more risk involved. I'd love to hear how you kind of think we're able to balance that more data with kind of trust alongside the new innovation that's coming along. How do we see us balancing that?
Yeah, so I mean, people get very hung up on this, don't they, that data and digital somehow introduce it. And I'm not saying, and it's not that it doesn't introduce risks, of course it does. And, you know, cybersecurity and things are increasingly more important. And we all know what happens with, you know, cyber attacks and what have you. However, so going back to my digital identity example, in home buying today, that customer is sharing their passport, driving licence, bank statement, utility bills 4 times with 4 different actors, in a non-digitised format, in a very unsecure way. No idea where it's being stored, how long it's being stored for, what it's being done with it. And despite doing that identity check 4 times, property is still one of the biggest areas of fraud in the UK. So that identity process is not working. It's not keeping customers safe, but it's also putting businesses at risk because you're sharing documents in a way that's not the safest. So actually creating minimum data and security standards, but trust frameworks where there is a minimum bar that everyone has to achieve in terms of how they're storing their data, the security that sits behind that, the credentials that are collected and shared, the consent models and the liability models that are put in place. There's a whole governance structure around smart data and trust frameworks that increases the safety and security way above what we've got today, but it raises the bar for everyone. So if you are currently, I don't know, working in an industry where you're maybe less regulated, but you're working on paper documents and still sending things snail mail and sending things over unsecure email or through a portal, like that's not going to be enough anymore. You're going to have to meet a minimum standard of safety and security in cyber that doesn't exist today. And that's what a trust framework is there to deliver.
Do you see a certain stage of the home buying process that would benefit from that in particular, or is it more of a holistic kind of end to end? It will benefit all stages.
So it actually flips the whole thing entirely on its head. So for MD who's been through the process today, who'll talk to you about how long it takes, on average 22 weeks to buy a property now. 3 in 10 transactions actually don't make it to completion, and people find out lots of things about the property or their mortgage after they've gone through the process of doing the application, and they get their mortgage offer and think, woohoo, we're there. And then all of the legal work kind of gets done in detail, and then you uncover, and then you get your searches and your valuation report and find out things that actually you really needed to know way before you even went to visit the property in the first place. So changing this actually flips the entire process back to front, where all of the data is available before the property even gets marketed. And when done correctly, the seller should be instructing their conveyancer and ordering their searches as part of their listing and making those available to potential buyers, so that all of those legal checks, searches, all of that work, condition of the property has been done up front. And that actually gets rid of huge amounts of the inefficiency in the process. But it's radical, like it's completely back to front to how we do it today. But we have OPDA members who've been doing this in live for over a year now on thousands of transactions, and have proven that we can reduce fall throughs by 43%. We can take huge amounts of fraud out of the process. We won't touch wood, but we've had no instances of fraud yet on a digitised process. And we have been able to get consumers from offer accepted on their property to exchange of contract in 15 days instead of 22 weeks. And that, for consumer confidence, transparency, trust, security, just knowing that your transaction going to go ahead, is changing. Like, it's transformational for the consumer, but transformational for the industry. Securing your pipeline, knowing when you're going to get paid, knowing that the deal is going to complete, getting rid of all of your post-valuation queries and telephone tennis and everything that happens post-offer today. All of that just disappears. So yeah, complete change.
I like that phrase, telephone tennis. That's a good one. And yeah, I think that back and forth is such a pain for those who are trying to buy their home. And as I said, it's such a big decision for people. They don't want to have to be going back and forth, and they want to have that security with them, knowing that they're making the right decision. People will go in with all the information up front. They'll have 100% confidence that they want to purchase the home, and they've got all the information. They can make that trusted decision and feel that they've made the right choices because they have all the data up front. So it is really about utilising that data even for the customer, so they feel trusted.
Yeah, and buying a home is a really emotional purchase. I mean, especially in the UK, particularly in the UK. But we tend to buy or move home because something else is happening in our lives. Either you're getting married, you're having kids, you're getting divorced, you're moving jobs, you're moving to go and care for someone. There's usually a reason, and the reason's usually quite an emotive reason to start with. So emotions run high as an emotional purchase. So there's always a property for everyone. And having the information up front and knowing what you're buying before you get into it just means that you're ready. It doesn't change your buying decision, but it means that your buying decision is based on fact. And in other countries where we've had digitisation of the property market, or even in Scotland where, you know, pre-sale packs are legal, like you have to have one, you can't sell without one. When they introduced that, they saw no decline whatsoever in their housing transactions. None.
I think also you touched on how kind of other OPDA members have been doing this now for a while. Are there any members who've had specific lessons learned from the process where they still think there might be an inefficiency, or they've realised a really significant gain at one stage in particular?
So we've all of our members join OPD because they're all committed to digitisation, but they're all committed to the standards and contributing to the standards and adopting them, but they're all at different stages of adoption. And we've got, our member industries are really, really broad as well. We've got everything from one-man band prop tech startups right up to FTSE 100 listed and everything in between. So they're all at very different stages of their journey, but they're all really good at sharing their experiences. So, and there's been some really interesting announcements recently. So I'm sure most people have seen the most recent one with LMS, Lloyds Banking Group, Connells. There's a whole list of people who were involved in that, where they did their pilot and live testing last year. They were the ones who saw the 43% drop in fall through rates, and they immediately took an average 30 days plus off the transaction time for the estate agent and the conveyancer, who both saw, but they thought that estate agent listings would go down because people the seller wouldn't want to spend money and have their digital property back. They actually saw an increase in listings, and their conversion of potential sellers to actual sellers onboarding went up, not down, which was really a surprise for them. So they're now doing a national rollout with Lloyds and Connells and everyone else who's involved in that. So yeah, they're really good at sharing their success stories.
I mean, that's a real achievement, and I guess it's kind of the proof is in the pudding situation where you're proving exactly that there is potential here, and it could really make a difference in people actually clicking, yeah, I want to buy the home, I want to do it now, and I want that speed and efficiency, because at the end of the day, I think that's what customers are looking for. I was reading an article the other day about how people are wanting more of like the Uber or Amazon experience of buying a home. It's a very much click and collect situation. We're not quite there yet, but the aspiration is there. However, as you said, it is such an emotional purchase and such an emotional moment in one's life to buy a home, that there's a lot more process involved than a quick Uber delivery, I'm sure.
Yeah, and absolutely there are digitised journeys in retail and travel and things where we absolutely should take lessons learned and take the good things from. But buying a property is not the same as buying a kettle or a plane ticket, and
Not
if
quite.
you get it wrong, it's very wrong. And there are also safeguards for consumers. You really don't want to be sitting on your sofa on a Friday night with a glass of wine on your property portal of choice and wake up on Saturday morning going, oops, bought a house.
Oh no.
So there are some things where,
A few guardrails in there.
some guardrails and
Yeah.
consumer protection absolutely should be in place. So yeah, we're not trying to create an Amazon style buying journey.
No, I think that would be a bit too risky for me, because I'd just be clicking buy all the time, to be honest.
Yes.
And I know you also touched on, for instance, some other countries and how they've developed their own kind of open property data. What kind of lessons do you think we could be learning from them and other countries who might be further on in the journey of digitising this process?
Yes, I think one of the things that we've really learned, if you go back to when open banking was first introduced, so the UK were the first to have an open banking scheme, and which is the first trust framework that existed. It was built from scratch, and that was a huge leading piece of innovation around the world. But that was back in 2016 we went live. So that's 10 years down the line now, and we've seen other jurisdictions have taken the concept of a trust framework and open banking principles and applied it. So, the most recent one is in Brazil, where they've implemented open finance completely. They did the whole thing in about 6 months, and for a tiny amount of money compared to what we spent on open banking. So we've seen that kind of acceleration and as things iterate, and 10 years is a long time in technology, things have matured a lot since then. So there are definitely examples we can take of Brazil, Singapore, the Middle East, where open finance and trust frameworks have been embedded in other industries and take the acceleration they've done. But other property markets, you take the likes of Australia, where they have a lot of standards that are already embedded for identity, for mortgages, for completions, for house settlements done. Norway is a great example, where Norway's land registry, they worked with the mortgage lenders, and it's a much different industry to ours. They don't really have the concept of chains, and they're not an intermediated market in the same way that we are, on smaller number of lenders. But they got together and actually digitised the land registry completely, and made all of the data free and open source, like completely free and open source, and just huge change. So there's lots of things like that where we definitely can learn.
Yeah. And I think with all those lessons, there's obviously that future aspiration. I'm curious to understand what kind of a truly connected mortgage journey looks like to you, and even whether that's in 5 years from now, or how you see that going down the line.
Yeah, in fact, doesn't 5 years sound like a long time away? And it's really not.
I feel like it doesn't sound long at all. It feels like I'll blink and I'll be 5 years older. Buying a home, maybe.
Yeah, the last 5 years gone really fast. So the smart data strategy is already set out that we will have 20 plus smart data schemes delivered by 2035. So we already have a timeline that we're working to, but actually the first prioritised use cases based on that economic impact analysis will be delivered by 2030. So they'll actually be delivered in 4 years, which is really soon. So those first use cases will be property, the transition of open banking to open finance, and open energy. And we've already got digital identity, the digital verification service, which is flying, is well underway. And property is the perfect example of where you need all of those smart data schemes to be interoperable, And home buying is the perfect centre of that Venn diagram, where you need identity data, property data, finance data, and energy data, because you need all of that when you're buying and selling your property. So it's a great first use case to deliver and prove interoperability within our own scheme, but interoperability across the other smart data schemes, but also how we federate some of those standards. So within 5 years, we will absolutely have a scenario where, as a consumer, you will be able to access your identity data, your existing property data, your finance data, and your energy data, and pull it all into whatever solution you want to pull it into, and to share that data in order to go, what is the property that I can afford to buy? Where can I afford to buy that? This is my criteria. Where can I find that property? And know that you'll be able to buy that property before you even start your search. And all of the data that you need to enact that transaction, you will have at your fingertips, and you'll have the power and the control to share it with the parties who need to. So for me, that opens up a whole new world for consumers, in the same way that open banking did for fintech.
Yeah, and I think that eliminates definitely a lot of the umming and ahhing. I know, at least for me, it's, oh, can you afford this? Do I need to wait longer? Who's the right person to go to? So as you said, it's that upfront aspect, which is giving a lot of trust and confidence in the buyer as well, which makes the whole journey much more enjoyable. I don't think anyone would say it is an enjoyable process usually, but yeah.
Just to say, on the finance side of it, I think one of the really nice things that will come out of this is, in the same way that banking did for fintech, you will see an absolute explosion of customer tools and propositions that help people to be mortgage ready, that help you on that journey to, how do I become a ready to buy consumer? How do I get my finance in the right place, my deposit? How do I get my affordability right? How do I do my credit score? And all of that kind of consumer education and engagement is actually, I think, really healthy, because we're not that good at engaging with our money today, and we're not good at being in control of how we use our money to do the things that we want to do to get our dreams and aspirations. So yeah, opening up this data, I think, has huge power for consumers.
Of course, it's the wider piece of, there is so much hyper-personalisation possible out there in terms of personal finance management tools and different ways for people to become educated. I think that financial literacy is something I'm at least very passionate about, but that I don't think you even learn enough in school. Like, I remember leaving school having no idea what a mortgage was. I wish I learnt more about that, but hopefully through time and changes there as well. It's the financial literacy piece, which I think, as you said, opens up so much more opportunity.
Yeah. And that goes back to your product point from earlier, because once you can start that level of personalisation, you can create very different products based on that consumer circumstances.
Based on that situation,
Yeah.
I think we're going to move on to the quick fire round, which is a round we always do, where we ask you kind of quick questions, quick answers, try and put you on the spot a little bit. So the first one is, if there was one message you hope leaders would take away from Woodhurst's report, what would it be?
To be optimistic. I think it's been really tough the last few years. I think the next few years are going to be incredibly exciting for everyone in it. So yes, be excited.
I like that. That's a good one for sure. My next question was actually about what gives you the most optimism. So that's actually quite a good one.
What gives me? I think this is the first time in my 20 years in the mortgage industry that I have felt like government, industry, and all parts of our industry are working towards a common goal and truly collaborating in a way that I've never seen before.
Mm-hmm. If you had a magic wand and you could change any stage within the home buying process or any of that, what would you change, or what would it be?
I would change the customer experience. I would put the customer right at the start of it, right at the heart, and give them all of the power and control to make their own journey the way they want it to be.
At the end of the day, it is their decision. It is their home at the end as well. And then slightly more personal, do you have a book, podcast, or series that has inspired you?
So I do listen to a lot of our industry podcasts. We have some amazing people in our industry who are really inspiring. But outside of the industry, The Guilty Feminist. One of my colleagues at Atom Bank took me along to a live recording of it a lot of years ago at the studio behind King's Cross. Absolutely fell in love with it. So yeah, that's still my go-to.
That's a very good one. Yeah, I've listened to some of those. They are funny. And then finally, do you have any best career advice you'd give, whether that's to me or to the wider world?
Oh, okay, I'm going to give two. So Mark Mullen, who was my chief exec at Atom Bank, always told me to be yourself. He was like, the world loves an original, which is a quote from Chanel. My second one from a very, very long time ago was to always have a mentor. I've always had a mentor all the way through my career, but have a mentor, but also have a cheerleader. Have somebody who has got your back, who will advocate for you, who will ring up your boss who's just given you a new job and tell them that they made a really good decision. Everybody needs a cheerleader in their life.
Well, I think that's safe to say you're definitely a cheerleader for kind of digitising property data and moving this industry forward. So thank you so much as well for that. But thank you so much for being on the podcast. It's been such a pleasure. And I'm sure there are so many more moments for optimism, cheerleading, and plenty of celebration further down the line, especially when we see those acts finally come through. So thank you so much.
Thank you.